Hello and welcome to Swift Chats. This is Timothy Swift. I'm with Royal LePage Signature Realty. I'm a real estate agent. Today I'm starting a series of chats with other related real estate professionals and support persons to help with real estate transactions. Today we're going to welcome McDaniel Phillips from Dominion Lending Centers. He is a mortgage broker and he's going to tell us all about that process.
I'm excited for this conversation today.
I am too. And it's just going to be a straightforward who, what, where, when, and how.
Okay, let's do it.
I recorded a little intro earlier, so I was like, okay, we're all set.
Did you?
So,
Love it.
so let's welcome McDaniel Phillips. So, should I call you Mac?
Yes, please.
Yeah. Okay, because I was like, I can be really formal, like you can be. You can call me Tim. We'll be good. So, tell us a little bit about who you are and what you do.
Yeah, thank you so much for the opportunity to connect today, Tim. My name is Mac Phillips. I'm a mortgage broker. I work with Dominion Lending Centers. I'm now in my fifth year, and I really just specialize in helping investors, first-time home buyers, business owners understand their options, get the best solution, and obviously qualify to purchase a home. Have been having a blast, work all over the GTA, and actually have now expanded out to Canada wide. So BC, Alberta, out east, I got you covered.
Cool. Do you have to have special licenses in every province? Like
You know
really?
what's interesting? Because I'm a part of the corporate office for Dominion Lending Centers, they actually have some behind the scenes options for us to be able to lend Canada wide without needing the additional licensing, which saves us a few bucks. I actually just got a new client that's purchasing or closing on a pre-construction in Alberta in a couple of weeks. So yeah, it's a one-stop shop.
Well, that's great. Makes it easier for everyone because I have clients that I refer to all across the country as well. I closed one in Victoria recently, and it was just like trying to figure out how do I help you with this whole process. And now that I've got people, in every province, it's like, okay, let's make this happen. So
Yeah, yeah, 100%.
how does a buyer begin this process?
I think the biggest thing with buyers is they need to have a bit of understanding as to what their goals are. Often I speak with families, it's like, yeah, I just want to buy a house. Well, it needs to be more than that. It needs to be, what's the real purpose here? Is this for building generational wealth? Is this an investment property? Is this so you can just stop paying rent for a little while? Like, I really want to understand the family's why as a very first conversation piece when I meet a new borrower. I really want to be invested in the overarching plan, and I really need to understand, what drives that family in making decisions around buying real estate. That's where it starts. Often we do a bit more of an invasive fact finding around what's important to the family than you would expect working with the branch. I've heard a lot of times it's just, hey, what's your income? What's your down payment? This is your option. But I think it needs to be more relationship based. So once we understand the vision of the family, it starts with just understanding the numbers. What solution is going to be best? What's the risk appetite for that borrower? What location we want to look to invest in. And I'm a very see, don't tell person. I love to build out family budgets, financial plans through Excel so that you can see it, not just hear it. And I think that really demystifies the process a bit better.
It sure does, especially for a first-time buyer when they're so overwhelmed. And I'm like, okay, we have 5 steps. Talk to your financial person, then talk to
Yeah.
your broker. And I tell people it's like use a broker, not a banker. Can you tell people why you would use a broker, not a banker?
Absolutely. So I work with a lot of new buyers, a lot of first-time home buyers, and often they're, rate focused or laser focused on the interest rate, where I've been able to really, obviously meet that need, but also offer some perspective is, why I work with a bank versus a mortgage broker. So the first thing is options. We have the ability to then present you with essentially, a buffet of mortgages. There's 5 or 6 big banks for a reason. They all do business a little bit differently. They all have different rates and different programs. And, do you benefit from saving time and having someone who is, been in the business many, many years to essentially present them all to you at the same time with an understanding of the quirks, the pros, and unfortunately the cons of each one. The second thing is around protecting your credit. I think a lot of families don't realize that when they go to each bank individually, they're going to check your credit. And depending on what the score is right now, that could either have a negative impact on the score or worse, have an impact on you actually qualifying in general if the score is dropped, further. And I think the last one and the one that I think speaks, the biggest, especially in a high interest rate environment, is strategy. When rates are at 1%, nobody really talks about the why. It's just, hey, best rate, have a good day. But when rates are high and also coming down over the next 6 months, it's really about, hey, what a solution is going to save you the most amount of money? Do we take a short fixed? Do we look at a variable? Do we then begin to time the market and when you're going to convert into a fix at a later time? Those kinds of conversations really help the family save money. And a lot of the value in working with myself and a mortgage broker is it's not self-directed like at the bank. When you walk into the bank, you really have to have a good understanding as to what you're looking to ask and look to understand better. Whereas I can take a step back and say, hey, you know what? I've worked with 150 families just like yours. This is where I've seen them be successful. Let me give you some insight as to what we can do to protect you.
Right. And you shop it around just not to just the big banks, but to all different financial institutions, credit unions, even if necessary. Yes. So you do
100%.
what we
Yeah.
call A lenders, which are the big banks, and B lenders, which aren't the big banks, but still offer competitive rates, especially for people who are self-employed.
Oh yeah, 110%. I think a lot of people and some of our listeners would be good to learn as well is that there's actually three buckets, if you will, of lenders that all fall within the A section. So there's the big banks that we know, but there's other lenders called monoline lenders, like you may have heard of MCAP or First National, for example. These are actually subsidiaries of some of the big banks. They're still considered A lenders, but there's no curbside presence. And then the other one, which you hit on, is the credit unions. If you're in a smaller town or really benefit from that relationship style lending solution, a credit union can be a fantastic option. And then, of course, B lending for those BFS clients.
Right. I'm very much on the relationship building because it's like it's not just
Oh,
about
yeah.
it's like I'm not transactional. And I think people have to really understand that. It's like, it's about we're going to hold your hand and we're going to help you figure
Mhm.
out what's best for you. And I tell people it's like go see your mortgage broker, tell them all your numbers. I don't need your numbers. I just
Yes.
know what you can afford and what you want to afford because you'll give
Mhm.
them kind of top numbers and here's the bucket you're comfortable with. Um,
I want to
so
expand on that one more second before you
yes,
go to the next
absolutely.
question. And you're 100% correct, Tim. So when I do a financial review for a family, I do two budgets. Hey, this is your max purchase price, just so happens this is the payments. And the other side is what's your budget comfortable? Like where do you want to fit within? You want to be a $3,000 mortgage payment, and then I reverse engineer what that happens to buy you in the marketplace so families don't overextend themselves.
Right. Yeah, and I like that too. And when I'm working with younger couples, I always talk about, your income's increasing, the value of whatever you purchase is
Yep.
increasing. So
Yep.
if you can afford to go to your max now, in a year, you're going to be in a great place because you're going to be your wealth is going to be more, your income is going to be more, and you've got a fixed rate hopefully on your property. And we're getting into a very interesting period with in mortgages where the adjustable rate's going to outshine the fixed rate as we're kind of talking to the economist in the brokerage. And it's like
Yep.
we're in this very interesting time. And first-time buyers have a big advantage now with the 30-year fixed or 30-year amortization, sorry.
30-year amortization. Yep.
Yeah. So there's lots of
120.
interesting changes coming along. So we talk about using a broker and how to get started. Is it simply a phone call? I did pop onto your site and see that you can get on your email list and have get some information. Is that where you want people to start? Is like start on the website, or do you want them to call you first? Or what would you prefer?
I think if there's a prior relationship with a business partner or realtor partner like yourself, a very fond email introduction is a great way to get the baton, if you will, passed over. And then I leave it up to the client. What's best for them. I've got an office in Mississauga. Not very many people come to see me, but that's an option. Or do we have a virtual conversation similar to this? Get everybody, in the background. I want to meet mom, dad, all the borrowers, not just the one, that one decision maker or we have a telephone call, whatever's best for the family. One thing that I've actually, expanded is my personal availability. I was really, early in my career, mind you, building a fence around my hours where, hey, I'm 9 to 5, I'm banking hours. Well, what we find is that many families, they're working. They don't have the ability to connect with you in 9 to 5. And some of our value is the ability to be flexible, either before 9, after 5, and I actually take meetings Saturdays and Sunday mornings from 9 until noon because people are at home, they're on the couch, and they're willing to have the conversation. the business has grown drastically just in changing my availability around when we have that first conversation.
Well, especially when you're working in different time zones, you have the same.
Mhm.
I mean, I've realized that too. It's like, well, what are you doing on the weekends? Like, those are my working days.
Exactly.
I may get a half a day off in the middle of the week, but those are my working
Yep.
days. Cool.
Yep.
So, the easiest way to find you, phone numbers, email.
Yeah, so my phone number is really, really easy. I bought it off a pizza shop going out of business. No. So 647 5700 647 500 is my phone number. Mac at phillipsmortgage.ca. But I really encourage people to go to my social media page, which is Mac Mortgage Broker. I'm very consistent, almost daily videos, educational. Not looking to sell or convince anyone, simply educate and allow you to make a better and informed decision whenever the time comes.
So I have one more piece that I want you to educate the consumer on because it's one
Please.
that comes up all the time. Bank of Canada rate, mortgage rates. How are
Yeah.
they not the same?
For sure. So I think the biggest thing is just understanding what drives what. Often people say, "Hey, Mac, well, rates went down a half a point today. What's my new fixed?" And it's really important to make sure that early on we offer the education as to what impacts the variable and what impacts the fixed. So yes, the Bank of Canada, they drive the overnight lending rate. They have an impact on prime, which lenders then provide their own discretionary discount. So if you're ever quoted a variable, it's always prime minus, and then whatever that discount percentage is, and that's the flexible piece. On the other side of the coin, for those borrowers who maybe a lower risk appetite, maybe they just sleep better at night knowing that they're not going to wake up tomorrow in a similar situation to what happened during the pandemic, is a fixed option. And that's actually then driven by the Canada bond yield. So I'm a nerd. Every day when I get up, first thing I do is I check the 5-year bond yield so that I have an understanding as to what's happening in the marketplace. And luckily, we're starting to chip away, and it's actually coming down as well. So, if anyone is listening and is interested in learning more about what impacts them, 5-year bond yield impacts the 5-year fixed. Why that's helpful to know is because if you're negotiating with your bank on a renewal and they've given you an offer in today's market, and you walk in after a week and say, "Hey, let's net really crunch some numbers," and you've seen the bond yield come down, you use that. Speak to that. "Hey, bank, 5-year bond yields have come down since you gave me this offer letter last week. Sharpen your pencil. Go back and give me a better offer." I don't think people realize that the rates are that negotiable based on the market conditions. And then the other side is just the discount off of prime. If you want a variable, great solutions today, negotiate that discount. Banks are flexible. Often, if you ask and speak to the right person, you'll see some savings down the road.
The other piece is that, and I'm not sure if this is still the case, mortgage
Mhm.
brokers often get a better rate than the banks would give someone if they walked in out of the off the street. Is that still true? Is a bank still discounting brokers to bring them business?
Yes, so they incentivize the broker channel by offering preferential treatment, better rates, and as well, we know when to go back to ask for discretion. So if I have a family, and many do, they buy 90 days out, the rate that I give you from day one is may not be the rate that we get on the final 5 yards. We go back, we watch the market, and we say, "Hey, things have changed. Let's go back and provide that client a better solution." If you work with the bank directly, they're not going to proactively offer that to you. You need to know to ask. And your mortgage broker, if they're sharp, then they go back every week like I do and they say, "Hey, TD, things have shifted. Let's go back and make sure we're getting this family the best rate before closing." So you get the protection of the mortgage broker as well as a better rate often.
So can you talk a little bit about pre-approval and what it means and what it doesn't mean?
For sure. So if you've gone online, you've downloaded an app, you spent a few minutes on the couch and punched in some numbers, that's more of what's called a pre-qualification. More setting up some expectations where we haven't looked at the three big variables. When we do a pre-approval, and when I do a pre-approval, I want to get all the heavy lifting out of the way up front. So we can, really root out any red flags that would then limit your success or stifle rather your success down the road. So we check income, we check down payment, and we check credit to be able to provide you with the confidence to go and buy that home. I provide you a pre-approval letter on letterhead, knowing that we've checked all the variables so that when you actually put pen to paper, we know there's a mortgage solution that we can actually come up with and close successfully. Not every mortgage broker or bank are built the same. Often they won't invest in the due diligence up front. I think it's the only way to attack it.
Well, especially if we get into a competitive market, which we are getting ready to enter,
Mhm.
we're seeing that happen. It's like you want to have that piece out of the way, so you're not
Yeah.
having a condition that prevents that seller from going, well, we don't want to wait for your approval. We'll
Yep.
take the one that already is coming in with it. So that's why I encourage my clients. It's like get all of that information up front before we start shopping. Because one, I don't want you shopping for things you can't afford. People do that
Hmm.
all the time. I have a great story for that. And it's just like, if you're shopping for a $2 million house, you don't look at a $5 million house because you'll fall in love with it. And then you'll be like, well, how come I can't get that for $2 million? So we see that all the time. Anyway,
I'm
I don't
sure.
want to take any more of your time. I wanted to just kind of get a brief introduction to mortgage broker and
Thank
to
you.
yourself. I think we'll make a great team because I think for me, having people that understand the relationship is more important than someone providing the service because the relationship is going to be long lasting. The service is going to change as banking changes. So
I couldn't agree more.
thanks for your time, and we'll see you again in person soon for sure.
Thanks so much, Tim. I appreciate the conversation.
Thank you. Ciao for now.